David Hertel in for Aaron and Natasha. Well, residential real estate boom in Greater Montreal has reached its peak, and things seem to be stabilizing or even decreasing. New data shows that Montreal home sales for June were 11% lower than last year at the same date. To discuss, joining us is Randall Bartlett. He's the Senior Director, Canadian Economics at Desjardins. Thank you for joining us, Randall.
My pleasure. Thank you very much for having me.
So, explain this drop. What's behind that 11% drop?
So, I mean, what's behind the 11% drop is first and foremost the fact that we saw the Montreal, Quebec, and broader Canadian housing market really take off throughout the pandemic. That as people looked for more space, they broadly, fanned out across, suburbs and smaller communities and looked for detached homes and bid up prices. And so that was, broadly the catalyst for the high prices that we saw. A big part of that, too, is that interest rates ultimately were extremely low and that government transfers were very supportive of household income. So all of that supported the rise in housing prices. And then as the Bank of Canada started raising interest rates in March, that caused, and not just the Bank of Canada, but central banks around the world, that caused borrowing costs to rise dramatically. And ultimately, the housing market is starting to roll over, both in terms of sales and in terms of prices in Montreal and around the country more broadly.
So tell me more about the situation in terms of homes. I mean, single-family homes, the price right now in Montreal, where's it at right now?
So the price of a single-family home in Montreal right now, the median price is around $570,000, which is still 12% higher than it was in June of last year. So prices are still up, even though we're starting to see that. Activity is turning over. We're still seeing that prices are holding up relative to where they were a year ago.
So what's when we look at the causes, what's the part to be played by the supply of homes available? Because we have a lot of real estate agents that would tell us, well, there's not enough supply, and that's also what's keeping the prices up versus the mortgage rates going up. What's the play here?
Yeah, I mean, it's everything. It's all of the above. It's we're seeing that what we saw during the pandemic was that the supply of houses that people were looking for, we didn't have enough of them, and so those were detached homes, and those were part of that is what we call the missing middle, which is semi-detached homes, townhouses, larger condos that can accommodate families, so 3-bedroom plus kind of thing, where there just aren't enough of those. And that's not just a Montreal thing. In fact, Montreal does a better job of providing that than other cities do. If you look at, places like Toronto, who's even that much more extreme, or Vancouver, right? And so certainly so there is a supply element to it. There's no question there. The other part of it, though, is the demand side, is that when people were, looking for more space and during the pandemic when they were working from home, fueled by ultra low interest rates, ultimately that, spurred people to demand more housing than they had in the past. So there were supply elements to it as well as demand elements, and ultimately that led to the price boom that we saw. And now, as people go back to the office, as borrowing costs go up, we're starting to see some of that froth come off in the market. But I mean, there is some good news in there. I mean, part of that was in regard to Montreal and Quebec specifically, that Quebec is more affordable than some of the other big provinces in terms of housing. Looking at Ontario and BC in particular, and in terms of Montreal relative to other major centers like Toronto and Vancouver, still much more affordable than in other big centers. So there are a lot of positives going for Quebec that you don't have elsewhere. Quebec also has one of the lowest unemployment rates in the country. So very, very positive conditions that we think will be supportive of Quebec seeing among the smallest corrections in Canada in terms of the housing market, both in terms of prices and in terms of sales activities.
Okay, so Randall, that was actually my next question. You at Desjardins, when you're forecasting, say 6 months from now or a year from now, how are you seeing the market going in Montreal?
Yeah, so as I mentioned, we look to things like we look to affordability, we look at labor market conditions, we look at all of those things. And generally, it's fairly positive news. I mean, for the province overall, what we were looking at in terms of a correction from peak to trough was around 12%, which was below the national average of 15%. So that's in terms of prices.
That's prices. You mean a 12% drop in average price? Is that it?
In average price,
Okay.
That's right, from peak to trough. By comparison, I mean, Ontario was closer to 18%. Some of the maritime provinces were around 20%. So Quebec, all in all, should ride through this better than other parts of the country. And as you know, if we continue to see the labor market the unemployment rate be as low as it is, and wage gains be as strong as they are, 7.5% year over year in June, it's hard to see that Quebec would not perform better than many of other provinces, particularly the big provinces of BC and Ontario.
So you sound very optimistic. So I'm wondering, I mean, there's a lot of talk of recession. A lot of other financial institutions and banks are saying they're forecasting recession. What about you at Desjardins? Are you forecasting a recession? And if so, how do you see the economic slowdown impacting Montreal and Quebec? Because you're right. I mean, the numbers came out today, the unemployment numbers. I mean, Quebec has 4.3 unemployment rate. The Canadian number is, I think, 4.9. Ontario is 5.1. Anyways, we're the lowest, and so the economy is still robust, yet we're still talking about recession. So how do you think this will impact our economy?
Yeah, so at a national level, what we're expecting to see is that, we think there's less than a 50% probability of a recession this year, roughly 50-50 next year. But it's going to be a recession like no recession we've ever seen. I mean, just like the pandemic, the pandemic recession was like nothing we'd ever seen. The recovery was like nothing we'd ever seen. If we have a recession next year, and again, it's, we think it's about 50-50, it'll be like no recession we've ever seen. We think it would be a relatively mild recession because, household income is strong. The labor market is very strong. Household savings are at record highs. There are just so many things going for Canadian households that it's tough to see it being a deep recession. You look at the U.S., growth was negative in the first quarter of this year. It's expected to be negative in the second quarter of this year. But even that, calling that a recession is tough because it was all, because companies were drawing on their inventories, and that's what caused the negative number. So it's kind of a technical wonky thing as opposed to legitimate decline in economic activity because domestic demand was still robust. So could we see something that's kind of, one of the most unusual recessions we've seen, and something that's fairly short-lived? I think that would be the case if we do see a recession at all.
Very interesting analysis. Appreciate your time, Randall.
No, I appreciate having me on. Thanks so much.
Randall Bartlett is the Senior Director, Canadian Economics at Desjardins.